Hello everyone, welcome to the Crypto Intel channel. Today we'll find out why 99% of traders miss the true value of Hbar. Before we start the video, I'd like to ask you to subscribe to the channel, like this video, and click the bell icon so you can always stay up to date on what's happening in the market. It takes you literally a second, but for me it's motivation to improve the quality and level of the videos on the channel. We have a lot to discuss, so let's get started right away. Crypto says 99% of traders blame Hbar's price on technology failure. Wrong. The real driver is macro liquidity, high cost of capital, and correlation with the Russell 2000. As central banks ease policy, capital could rotate into compliant digital infrastructure projects like Hedera. Hbar currently trades at $0.089, with the 200-day MA sitting at $0.108. Chart analysis inside. Most crypto traders look at Hedera's price and think something is broken. Adoption must be failing. Technology must be weak. But Cheeky Crypto disagrees. In a recent video, he argues that 99% of traders are missing the real reason behind Hbar's price suppression. It is not because Hedera's technology or adoption is failing. It is primarily driven by macro liquidity conditions and traditional finance dynamics. Let's break down his argument, then look at the Hbar chart. Cheeky Crypto's video, Macro Liquidity, Not Tech Failure, is suppressing Hbar. Cheeky Crypto starts with a simple observation. Hedera's price is currently tied to macro indicators, not on-chain failure. The global cost of capital is high. Inflation remains sticky. Central banks keep rates elevated. In this environment, capital stays in safer assets like bonds and cash. Risk assets like Hbar get suppressed. He points to a specific correlation. Institutional trading desks use cross-market algorithms that link traditional assets like bonds and equities with crypto. Hedera moves with small-cap indices like the Russell 2000. When those indices drop, Hbar follows. Retail traders see a red candle and assume the project is dying. In reality, it is just macro pressure. The good news is that this is temporary. As central banks eventually ease policy, capital is expected to rotate out of fixed-income markets into compliant digital infrastructure. Hedera is well positioned for this because of its enterprise focus, regulatory compliance, and institutional-grade features. Deterministic transaction fees, predictable pricing are crucial for Fortune 500 companies. FedEx, Accenture, and other major firms are already building on Hedera. Supply chain, enterprise AI, decentralized identity, these are not retail hype narratives. They are real use cases. Cheeky Crypto criticizes the typical retail approach. He says most traders follow influencers, chase hype, and react emotionally to short-term sentiment. Instead, he advocates for a more sophisticated approach. Analyze macro liquidity pools, bond yields, and institutional capital flows. According to him, the current price weakness is an accumulation opportunity, not a reason to panic. Hedera price analysis, 4-hour chart, below 200-day MA. The 4-hour Hbar/USD chart from Kraken shows a clear bearish structure. Current Hedera price is at $0.08912. Hbar is up 0.7% on the day, but still deeply below key moving averages. 200-period moving average. The 200-period moving average sits at $0.10803. This is a major resistance level. Price has not closed above it since early 2026. The 200-day MA on higher timeframes is even higher, not shown on the chart. As long as Hbar trades below $0.108, the broader trend remains bearish. Other moving averages. The chart shows a cluster of moving averages near $0.11 to $0.13. Price is trading well below all of them. Structurally, this remains a weak chart. The RSI reads 51.73 on the primary reading and 46.93 on the secondary reading. That is neutral to slightly bearish. There is no oversold signal and no bullish divergence visible yet. Bullish scenario. Hbar reclaims $0.095 and pushes toward $0.10. A daily close above $0.108 would be the first bullish signal in months. That breakout could target the 0.12 to 0.13 range. The macro catalyst would likely be a clear Fed pivot or strong progress on the Clarity Act. Bearish scenario. Price fails at 0.090 and drops to 0.085, then 0.080. If macro conditions worsen, higher yields, stronger dollar, tighter liquidity, then 0.075 becomes possible. A break below 0.075 would open the door to $0.065. Likely scenario: Hbar likely trades between $0.085 and $0.095 for the next few weeks. The macro environment is still not supportive enough for a major breakout. Central banks remain hawkish and liquidity conditions remain tight. Hedera's fundamentals are strong, but price still needs a broader liquidity shift. Expect slow sideways action with occasional dips toward the 0.082 to 0.085 area. What your plans, hopes, and expectations are for it. The best and most engaging comment will be featured in the next video. Just a reminder, friends, informational and news videos are posted on the channel every day, so you won't get bored here. And of course, don't forget to subscribe to the channel and click the bell icon so you're always up to date on all the latest news. And if you liked this video, please support me with a like. Your like is my motivation. Thanks to everyone for watching, and see you next time.